Morning everybody to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors and this is not financial advice. I'll jump onto the charts in a minute. There was no news today. So we're taking a look at NAS on the right and oil on the left here. So we had a big run up yesterday, also no news day. Because of that, market consolidated during opening on NAS, and then we had a huge drop, punishing all the people that were long. So we have a kind of a mixed model today. Asia is above London, so it looks like a downside expansion model. But now we have New York, which is engulfing both of them. We've taken out both Asia highs and London lows. And there's a bearish confirmation. So even though on the higher time frames we are bullish 4-hour daily, the fact that we are bearish on the 1, the 5, and the 15, and the fact that we have a red box and a bearish confirmation, we don't have a full downside expansion model, but this would still leave us open for a potential sell as long as the price comes back into our key zones. Right now, this is extremely, extremely bearish. Look how far away we are from the 20. We are under the 238 though. Please make sure you watch all the videos on the Learning Hub so you understand the strategy. Here's our fair value gap of from New York. London didn't really give us one unless it's really small that we can't see it. A lot of consolidation during London. London gave us a bearish confirmation, but then it ended up breaking the range, so that was false. On oil, we are red across the board. We have a downside expansion model. We have a red box. No confirmation yet. This would be on trend for us to take an actual sell. Here, since the higher time frame bias is bullish, we're going counter trend. But 1 minute left in this candle close. That is a big confirmation candle. Just patiently waiting. This market is moving extremely, extremely fast right now. Right now, the main fair value gap of interest is this one. Let's see if price can even get back up here while the 20 EMA meets us in the middle. So that's what we'll be watching and waiting for. Okay, so we have our confirmation. We're actually close to previous day's lows. The reason we're watching both these markets is, again, you can see how aggressive this is right now, going counter trend. If we can catch a trade on trend, that'd be the best. And right now, oil is bearish across the board. This would be a better sell for us if we get that confirmation. We're still within London's range. So we have not broken London lows for oil. Now, since we left another fair value gap here, this becomes a breakaway gap. I would like the market to actually come back up to here. Otherwise, this is a runaway train. Like there's no way to catch this. There's no way we're willing to jump in and then see that retracement happen. So unless it comes back here, slows down, kind of meets the 20 at the midpoint, we're not interested in NAS. Remember, we want to see a confirmation and then a retracement immediately. We're already at one standard deviation. That's another thing. And that's how these standard deviations save us. As mentioned before, one standard deviation is kind of our low-hanging fruit. As soon as it hits that, majority of the juice has already been squeezed. It doesn't mean that we can't continue to drop and go all the way to 1.5. But we would like a retracement before it hits one standard deviation, which it's close to hitting now. So we might just focus on oil. But we'll see. This was already a big range. So the fact that it's already gone one standard deviation and it just hit it now. Let's see what oil gives us. Well, the main point of this strategy and this indicator is capital preservation. There's no point in us jumping into trades if there's no 1 to 3 risk to reward. Look at that. Still pushing all the way to 1.5. Yeah, this is done. But it lets us know it's quick, right? Like we're only 8 minutes after range confirmation and we already know that this is now heavily manipulated. Doesn't mean that it can't still come back into the range, bounce off here and give a push to the downside. But it just means that the probabilities are decreased now. It's already gone 1.1, 1.2 standard deviations, which was technically our low-hanging fruit for the day. So we'll focus on oil. Keep an eye on NAS. We'll still try to call this, but I'll show you the difference. Even though I'm not interested in taking a trade here, I will show you the difference. what the actual play-by-play would be. That's still the fair value gap of interest. Not interested in this one. Still waiting for the 20 to be hit. No retracement, no early retracement. So oil bounced off of this fair value gap. No confirmation. NAS slowly pushing its way towards 1.5. There's your London low. Now it's almost at 1.5 standard deviations. And again, there was no news yesterday, none today. On days where there's no news, the indices are more or less just seeking out liquidity. So you'll see a lot of, that's what happened here. Right at open, you had a lot of back and forth, taking out the high, taking out the low, taking out the high, taking out the low. Just engineering new liquidity, playing both sides. Many people went long right here, and many people went short right off the top as they saw the rejections, the wicks. Those are the people that play the New York Open, of course. Still no confirmation on oil. And a counter trend was fine for anybody joining us late. Like as long as you have 1, 5, and 15, and they're going in the direction of the counter trend, and you have a box bias and a confirmation bias that matches that, then it's okay to take that. It's just that today on NAS, we've already gone past 1 standard deviation, almost hit 1.5 standard deviations. So the juice has been squeezed. It's not something we're interested in. And because there's no news, we're seeing a lot of what they call seek and destroy, just aiming for liquidity. Whereas on oil, again, we're red across the board, downside expansion, red bias on the box, just waiting for that bearish confirmation. We have an interesting pattern here. We dropped and the range pulled back up into London range, into this fair value gap. Now that's not London's opening fair value gap, that's up here. This was the last fair value gap formed after London range. So I wouldn't consider this an early retracement. This was still the range formation. But now that the range is formed, if we touch this 20, that will be considered an early retracement. Meaning if we touch that first, before we get that bearish confirmation, the market will most likely move fast. But for the time being, this is the area of interest. Either I want to see a bearish confirmation, then a retracement back into the zone, or I want to see a early retracement and a push, then we get that bearish confirmation. So now we do have, this becomes a breakaway gap. We have a gap down here. But this is the New York opening gap, so this is a lot stronger, has more pull. About 15 minutes away from 11. And we'll continue to look at NAS, just do some just to read the tape here. Now see, there's a fair value gap here. We're already so far outside of the range. We've already hit one standard deviation. It could just tap into this fair value gap and continue pushing. That's a breakaway gap. That's a breakaway gap. Could tap any one of these. This is where our probabilities decrease, so not to mention the juice has already been squeezed. We're almost at 1.5 standard deviations. We can drop this fib. So that fair value gap is the one that's sitting right in the golden zone, 61% to 71%. Oil, moving out of that fair value gap. There's another one here that we're getting rejection off of. We're still waiting for that bearish confirmation to seal the deal. We're getting rejection off of that. We get rid of this fair value gap. Where our goal is to set up a trade where we go right into 1 to 1.5 standard deviations. And we want to make sure that gives us our 1 to 3 risk to reward. But here we've already reached those areas without any real retracement. Market could do one of two things. It could either just push up from here and take out these highs. Market hates straight lines. Look at all these relative equal highs. It could just go back up, take out these highs, and continue up because we are still bullish on the higher time frames. That's why you want to be very careful when taking a counter trend trade. Or, again, it could hit here or take any one of these fair value gaps and then just continue to push down. But that's like trying to catch a speeding train. We're not interested now that the juice has already been squeezed. Oil bouncing off of this fair value gap. Let's see if it gives us our confirmation. About 10 minutes to 11. Your 5-minute candle. Nah, stuck at this fair value gap. Has a lot of options. It could take this fair value gap, this one, or depending on how fast it retraces, even tap this. The 20 might eventually move into this fair value gap. Oil, 3 minutes, 35 seconds left. Let's see if we get this confirmation. Oil slowly making its way back to this fair value gap. Now the 20 EMA is right above it. It connects here. That would be an early retracement, meaning it could use the next fair value gap after confirmation to take off. NAS rejecting off of that fair value gap now. Remember, for beginners, your goal is to find one high probability trade setup a week. If you get that one for the week, you're done. With the proper 1 to 3 risk to reward, you're aiming for 12% a month. We're hitting that fair value gap close to the 20. If it wicks off of this, that might be the push down. Now we do have people that ask, can you get in on the early retracement? As mentioned before, once we get that early retracement, usually the market pushes faster once we do get confirmation. We are going to be adding some material to the Learning Hub to kind of go over the early retracement itself and what's actually happening here and whether or not you can catch it. The probabilities are decreased of course. But there are ways of trading the early retracement. But all points of confluence have to match, and that's not what we're going over today. Today we're going to wait for confirmation. But we have actually set up a training course to go over the early retracement, how to catch that. This would be most likely one of those setups today, but since it's for learning and for educational purposes only, we're going to wait for that confirmation. I don't want to see it touch this 20, just wick it, and then push down. That'd be London lows. Oops, sorry. That would be London lows right there at the green line. But ideally, 1 standard deviation is what we would be going for. Low-hanging fruit. Still no touch. Remember, even to be considered an early retracement, we want to see it tap either the 20 or we want to see it draw into the opening gap. So right now it's floating in between. It's not considered an early retracement, and we have no confirmation yet, even though this thing will most likely confirm bullish, or sorry, bearish. NAS now over that fair value gap, slowly making its way towards the 20 EMA. Now this becomes the fair value gap of interest. About 2 minutes till 11. NAS rejecting off that fair value gap. Just tapped it. 20 EMA slowly making its way down into this fair value gap. We're going to leave this one up just because it's sitting at 61%. So you never know, it could go all the way up there and tap that. But right now, until we see more confluence, we have no idea which way this market's going. Oil, a little bit more obvious. We just want to wait for either tap here or confirmation. Now it's now 30 minutes. 30-minute time frame is also bearish. What we could be seeing right now is more or less a lower time frame retracement. We've been extremely bullish for the last 2 days. It's punishing anybody who went in for a buy yesterday. Yesterday was a huge run up. All that. Close to taking out these lows here. Actually, we already did, sorry. That's just where the market's retracing back to. So it's taken out all this liquidity. So if the market pushes down, I guess that would be the last of it, unless it's already hit. No, hasn't hit that yet. Oil coming back up into that fair value gap. Let's see if it touches that 20 now. $27 minutes. Our goal is to be in a high probability trade setup 1 hour after range formation. If not, we call it a day. back at that fair value gap. Let's see if we tap that 20. Still just gesticulating. Now, most traders fail because they don't have a stop loss in place. Now, you can see here, as mentioned before, there are traders that were going long here, traders that were going short here, after seeing these wicks on either side. That's what the market was doing. It was engineering new liquidity, buy and sell orders. For anybody who didn't have a stop loss in place here as they went long, look how fast this market moved. Sadly, that is what happens, especially new beginners. They think the market's going to rebound, come back up, just because of the way the market moves with waves and ebb and flows. No, sometimes it can just leave you hanging. Drop all the way down here. Keep going. Blow your account. Money management is very, very important. But those are the three main reasons why new traders fail. FOMO, no stop loss in place, and poor money management. NAS just again gesticulating here in this fair value gap, nothing of interest. Oil looks like it is going to most likely give us an early retracement, tap that 20. I'd like to see at least a wick up here and then push down to this, take out the London lows. Close to that 20 now. Remember, make sure you zoom in. Trading is all about precision, down to the actual tick. "23 minutes left. So most likely hit this 20, reject. Could even come up as high as this, maybe even tap this fair value gap, but that we'll consider an early retracement. And then it will most likely move fast. As you can see, there's no new fair value gaps created here. So until you see a fair value gap, a green one, you know it doesn't want to push up. until new red ones are created, it's literally using this one as its fair value gap of interest. So this is where all the decision making is going to happen, unless a new fair value gap is created. We'll count that a tap. Now let's see if the market wants to push. Or if it wants to come back up and tap it one more time. About 4 minutes, 40 seconds left. Let's see if we get confirmation on this candle. And it leaves a fair value gap. Then that will become your fair value gap of interest. That's the whole point of an early retracement. Just to reiterate, right across the board, downside expansion model, red box. As soon as you get a bearish confirmation, we're aiming for 1 standard deviation. And we'll use the first fair value gap that presents itself. And until then, if it comes back up and taps up here one more time, that's fine too. Again, no fair value gaps here. All just consolidation, engineering new liquidity. NAS still at that first fair value gap. It did tap up here, push down. Now it's just gesticulating. 20 EMA is now sitting inside of that big fair value gap. Oil's starting to push. Want to see that bearish confirmation, take out these lows, and then at least 1 standard deviation. Keep in mind the standard deviations, they're dynamic. They only pop up in the direction of confirmation, so you don't get all this mess. So as soon as it confirms, we'll see the standard deviations to the downside, which are important when you use them in conjunction with the data on fractal effects. On the Spotlight dashboard, we've taken 20 years of aggregate, and we show you how to utilize that information in framing your bias and your actual high probability trade setup. A little over 15 minutes left. So since this candle didn't take out the high in this range, right there, it could do one more run up, tap the 20, sweep all that liquidity, then push down, give us our confirmation. That's why early retracement setups are lower probability than confirmation. So once you get the confirmation, then you know you're going to get that retracement to a key area. But if you get that early retracement, you don't know if it's going to come back and sweep it again. But right now, we had no sweep on this candle, and we still have no confirmation. We need one or the other. So 16 minutes left. That's why it's important to have rules and stick to those rules. You want to be in and out. You should not be in the markets longer than an hour unless you're in a trade, a high probability trade, 70% or higher. Anything lower than that is gambling. All the information that we've put in the Learning Hub, it's only the important stuff. There's so many convoluted platforms and strategies out there. Try to teach you stuff that you don't need to know, that you don't really care to know. You can learn it, but it's not going to necessarily help you find these high probability trade setups. If anything else, it just confuses you more. So our goal is literally have you trained in a weekend. If you have the time, you can learn everything. You can go over all the videos in the Learning Hub in a weekend. That's how fast. And then just grab a demo account, practice with us. Live trading. Do that for 30 days. You should be proficient, good to go on your own. You can watch any asset you want, Forex, indices, precious metals. We have people that trade gold in the mornings, Bitcoin, oil. Strategy works across the board. So we are close to getting a confirmation here. 3 minutes, 45 seconds left on this candle. We want to see it close down here. 14 minutes left. Now we still have no fair value gap here. So if we get that confirmation and there's no fair value gap, then we might get another retracement back up here to take out these highs. Or if we do get a small fair value gap, it might just tap into that and keep going. NAS slowly starting to make its way up towards this fair value gap in the 20 EMA. "13 minutes left. Two minutes left in this candle. Still moving slowly. NAS is also taking its time. This thing could just easily reverse, get back on trend. Oil giving us a push. 52 seconds left in this candle. Let's see if we get that confirmation. And more importantly, let's see if we leave a fair value gap behind. Right now, this is the only fair value gap that's been left. So if we get a confirmation and then suddenly the market starts to retrace without any fair value gaps created, we could come back up here, sweep these highs, touch this fair value gap, then push. Or we could get a small fair value gap here. 5 seconds left in this candle. Doesn't look like it's going to give us our confirmation. Let's see if the next one does. Keep in mind the indicator paints out the fair value gaps, just so you can see. We already see a line there. Obviously we want to wait till this candle closes to see if this is a confirmed fair value gap. As you can see, it starts performing it for you, and then it closes it off once that candle closes, if it closes over it. No, all you have to do is extend it using a box tool. Keep in mind our indicator works exclusively with TradingView. Make sure you watch the orientation video. That's free on YouTube, so it tells you exactly what you need. Need a TradingView account, and obviously a broker. Please do your due diligence when finding a broker. We can't unfortunately help you with that, but there's a lot of good ones to choose from. Just make sure you do your research. So no confirmation, no fair value gap. Oil's starting to move back up. About 9 minutes left. NAS still stuck at that fair value gap. And the longer it stays there, the more likely it is to just continue pushing up and take out these relative equal highs and get back on trend. Remember, these higher time frame EMAs were created so you can tell what the higher time frame trend is, but then also when to take a counter trend versus a on trend trade. Because you've heard us say higher time frame session, or there's a daily bias and a session bias. So when we talk about the daily bias, we're talking about higher time frame. And then when we talk about the session bias, we're talking about the 1, the 5, and the 15. But now you can match them up. Here, we're on trend. Here, to take a sell, we would be doing a counter trend. Obviously, you want to match this up with other points of confluence as well. Your range model, your box bias, and your confirmation. But you just got to match up the colors. So we came back up, hit that 20 again, but still no fair value gap. Six minutes left. Now on Spotlight, the Spotlight dashboard on Fractal Effects, we will tell you pretty much when the average confirmation time is for the majority of the major assets and pairs. Like over the last 20 years, you can see what the average confirmation time has been. So when you go over that, again, your probability is decreased. You want to see the confirmation happening right around that same time. Same thing with retracement. We show you how deep it retraces inside the range, and that's what those inside the range standard deviations are for, that you see here, for example, on London session. These ones, as opposed to the outside the range standard deviations, which is our TP. So this thing most likely wants to push down now, but still no confirmation. We got the early retracement out of the way. That means once we get that bearish confirmation, it will tap into whatever fair value gap is created. If none are created and it just continues to push down all the way to one standard deviation, it can do something similar to what the indices did. And that's fine too. We didn't really waste our time. We didn't jump in. 4 minutes left. During these sessions, we will not be showing any trade setups that correlate with the early retracement. But in the Learning Hub, we will go over specifics of what to look for. We do have a strategy that capitalizes on the early retracement, but it's not for beginners. So this candle will be most likely our last. We're still stuck in the range. NAS didn't give us anything at all today. Please make sure you check us out on fractaleffects.com. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. And please subscribe to our Instagram, fractal.effects. We will be giving away some free memberships, 6-month free memberships, and also uploading certain educational material exclusively just to Instagram. About 2 minutes left in the candle. So just consolidating. And again, that's because there are no news drivers today. That's why you're seeing NAS behaving like this as well. .30 seconds left. There's still liquidity all the way up here. So the market could pull up, sweep all these relative equal highs. And then just push down. But that's our time. Please make sure you check us out tomorrow, and have a good rest of the day. Take care.